You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it's time once again for Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, at least we hope so, Options Insider Radio Network. Quite a few programs for you guys to check out, pretty much a dozen for you guys to sink your teeth into. Easiest way to do that, of course, the mothership, the flagship, theoptionsinsider.com, or you can head on over to your audio provider of choice, iTunes, TuneIn, Stitcher, whatever you like to use. You can even grab our mobile app. It's all available there, as well as a legion of partner sites all over the net. So wherever you find your favorite radio audio programs, chances are we're there. And of course, however you listen, live like today or perhaps after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do enjoy hearing from you guys, at least on occasion. All right. And joining me on the old program today, he's actually a newcomer to the show and indeed to the network. He is Tony Kolton, the founder and CEO over there at Prognos Analytics. Tony, welcome back, or we should say welcome to the program.
Thanks, Mark.
And as we are wont to do with all of our first-timers, Tony, why don't you go ahead and give us a little bit of an overview of your background. You've obviously been in the options space for a long time, and then how you found your way to starting Prognos.
Sure. I started trading options way back in 1976, and I was an accountant at a conglomerate here in Chicago named Northwest Industries. And after trading under the tutelage of a friend who was an elderly gentleman that was trading stocks since 1949, I was doing very well. And then I went down to the options floor in 1982. I leased a brown badge, and then I graduated to leasing a full membership, and I found that the IBM pit was the place for me, and traded through 1988 when there were 150 traders in the one pit. Now I think there's one or two, and everything's done electronically, but I really cherished my floor time. I went through the 1987 crash, and I used my technical skills and my mentor to purchase a significant quantity of November 140 puts. Back then they traded at 1/8 or $12.50, and was fortunate to miscount the day before the crash. I thought actually I sold most of them the Friday before Monday's crash, but I'm glad I couldn't count that day. I was actually on a golf course, and came in Monday morning of the crash day, still heavily short, and I was able to sell the rest of my puts at $50. And these puts had an intrinsic value of 38, but it was crazy back then, and people were crying and begging me to sell them the puts, and I didn't want to sell them. I thought we'd keep going down, and I threw out a ridiculous ask at 50, And I got mobbed. It was like trading places. Oh, 10 for you, 10 for you, 10 for you. I just sold them all out.
Like the FCOJ scene, you're right, in trading places. But it's funny you mentioned that. I heard a lot of those similar types of stories about the '87 crash, where when I first got on the floor of the SIBO, where a lot of the big firms that are still around today were around because of a similar story, like you just said. They forgot they had some puts in their back pocket, and it turned out to be the most fortuitous thing on the planet. So you could definitely see, I guess you can call it a line of demarcation in the options industry between pre-'87 and post-'87. Obviously, for a lot of reasons, things like skew came into existence around '87, but also in just the firms that survived and went on to become big players in the option space post '87. A lot of them happen to have similar stories to yours. So
yeah, I remember an older trader in the pit would always shout out every now and then, "Puts are your friends." And so I made a lot of money, and I always believed in good research and doing good research. I had a couple of programmers that worked for me, and I'd ask them a question like, it's the 4th of July in 3 days, and IBM's been up 1.5% over the prior week. What happens after the 4th of July? And they come into office, and they write a program, and they usually give me the answer around July the 10th when the information was useless. And so I knew how hard it was to get some good research done. And then a real brainy computer scientist that I worked with at Northwest Industries invented a database that was lightning quick, and it had an English-like language, and you could ask any question about the whatever was in the database. And I flew down to Austin, Texas, and saw a prototype, and he said, "Go ahead, ask any question. I have a catalog of bicycle parts loaded in." And I said, "What are you, crazy?" He says, "No, we could sell it to every bicycle part manufacturer in the world." I said, "Yeah, maybe there's 3 or 4. I said, "Look, I'm a trader. Could you load stocks, bonds, commodities in this thing, and we can ask questions?" He says, "Oh, sure, that would be easy." So I gave him 10 questions concerning IBM. For example, if IBM goes X and is down 0.5% more than the X dividend, what does it do over the next day and week and 2 weeks? And if IBM's up 3 days in a row, what are the odds it'll be up a 4th day? Questions along this nature. And he was able to get maybe half of them done, and I give him another 10, another 10, and another 10, and pretty soon we had a real good research product, and we called it the Market Information Machine, and we called ourselves Logical Information Machines. And I ran that company for 23 years. We started out with just $4,000, and we ended up selling it to Morningstar in 2010 for $58 million. It was a good product. Still is a good product.
An eighth to $50, 4,000 to the 50. I'm starting to see a trend here, Tony. Things have worked in your favor, shall we say?
Well, they're working very well with Prognos, and so I retired and was at home, and my wife asked me to return some cucumbers to the store because I wasn't doing anything. And I used to live in Madison, Wisconsin before I was a trader, and I became acquainted with a genius doctor, and I have actually another company where we're curing diabetes with stem cells. And my neighbor came over one day, and I had no intention to go back into the software business. And he had a lot of Groupon stock, a local company. I don't know how I got his hands on it, but he had a lot of stock. And earnings were coming up, and he asked me what he should do because the stock didn't look too well to him. And I applied my technical indicators that I used when I was trading IBM, the most important being money flow, and I looked at it and I said, hey, you got to get out of this thing. This thing's going to get crushed. And that was a few years ago, and it got clobbered by 20%, and he escaped, dodged a bullet. And then he keeps coming over. What's this stock going to do on earnings? Well, I had about 10 in a row, and the guy's telling me, oh, my God, you're so good at this. Why aren't you doing this full time? I said, no, I'm too busy. I got this stem cell company, and that was a prior life. I don't want to get back into it. And he keeps wagging his finger at me as he's walking his dog, and like I'm going to my car, and he's saying, you're blowing it, you're blowing it, you're blowing it. And then it was one day at 4 a.m. in the morning, I said, well, maybe this guy's right. Just as a side thing, as a hobby, I'll have my old programmers from Logical Information Machines computerize the indicators and the moves that they made that usually preceded a big move in the stock. And we came up with a product called the Earnings Information Machine. And we lay out for the next 2 weeks, everybody that's coming out with earnings, and we score the stocks on a score of 1 to 100, and then 0 to minus 100 for negative bearishness. And for example, the two worst stocks we had for this morning were Switch, SWCH. It scored very negatively on our rank system, and the stock closed around 16 last night, and this morning it was trading 13.20. I don't know where it's at.
Yeah, it's
now.
13.30. I just pulled it up. It's 13.35 right now, off about nearly 16%, about 2.5 handles. So,
okay, and the other stock was ISCA, this Motor Speedways, and they're down 16% too.
Yeah, they're down like 8% now, up 3.25. They're trading right around 39.5 or so.
Oh yeah, last I looked, it was 37.5, which was
they
60.
got down to lows like 37.17 intraday.
Yeah, now with options, you can really hit it big. The April 40s on Speedway closed at 80 cents. I think they traded as high as around $3, and the same thing with Switch. They both went out at 80 cents, and it was a four-bagger for both of these. And before I came on the air here, I looked at the who's good and who's bad for tonight. And unless things change dramatically between now and the close, which they can, I predict that LEN will miss, PLAY will miss, and CarMax, KMX will miss. Those three, that's what I think. And so I'm watching those carefully, and a lot of times you get a tip off. When you look at the open interest and some of these stocks, these three are pretty liquid. Maybe Play's the most illiquid, but it pays to pay attention to huge put buying and call buying.
Yes, we obviously do a lot of that in the network. And one of the reasons I wanted to have you on, quite frankly, Tony, is, stuff we're talking about here, the technical side of trading options. Not an area that we tend to talk about a lot here on the network for a variety of reasons. It seems for the most part, and I put myself in this category as well, a lot of options traders who came up through the options market tend not to be technical guys. I know for myself, I got a lot of my love and interest in technicals beaten out of me over the years of trying to use it to intraday gamma scalp. And maybe it was a time frame issue, maybe the indicators didn't work, whatever it was, it never really served that purpose for me. So that kind of beat my interest, that interest I had in and out of me. But it sounds like you you started from a very early time on the floor as a guy who was interested in technicals. So where did that come from? Was it like was it that mentor you mentioned who kind of brought you to the dark side of technicals, or?
No, it was losing $400,000 being a fundamentalist, trading options in the early 80s. That caused me to be a technical. I would talk about this with my mentor, and he kind of was giving me a problem that I was too fundamental. I shouldn't even look at the fundamentals, and he even quizzed me. I took a huge position. I took like $5,000, and over the course of a couple of years, I rolled it into 400 G's, and then I I put it on a big fundamental play, and my mentor said, well, if the technicals say sell, are you going to adhere to the technicals, or are you going to adhere to the fundamentals? I said, well, I wasn't quite a believer yet, and 100%. And then the stock gave the most bearish signal, which I still use today. It's like a symmetrical triangle when you pop out of the top, but you don't keep going. You pull back into the pattern. It's like, the ultimate head fake. And that's what this stock did. But I was a fundamental guy, and the stock's going to earn so much per share. I can't believe it would go down. And it really went down. And then after that, I just said, I threw myself 100% into technical analysis, pattern recognition, read the McGee and Edwards Bible, and the John Murphy book, and just immersed myself 100% in technicals, and that has worked.
So I imagine then that the foundations for the Prognos and the technicals, you guys started using it. I'm guessing it was started around that double triangle pattern you mentioned, and then you started adding on other layers. And obviously, I don't want you to give away the proprietary recipe, but what are some of the technicals that you think have a lot of value? I mean, here people throw around kind of low-hanging fruit stuff like Fibonacci and Bollinger's. I'm assuming you guys go beyond those levels.
Oh, yeah, way beyond. There's 7 technical indicators that we crank in calculating a score, and they are as follows: on-balance volume, money flow, RSI, MAC, the trend. That means is the stock above or below its 200-day, 100-day, 50-day, 9-day, and 18-day, and whether or not the 9-day is above or below the 18-day will give you an extra bearish or bullish reading. So we use the moving averages. Then we use what's called range. If the stock closes exactly on its low or high, that gets a favorable rating in our calculation. And then we use what's called pattern recognition or analog. We look at the pattern the stock has made over the last 30, 60, 100, and 200 days, and match that up with its entire stock trading history. And if there was a correlation coefficient of 0.95 or better, and we can predict from history a big move coming, we'll crank that into the formula. But all the technical weightings that we use are single weighted except for money flow. Money flow is the most important indicator, and we watch every trade, every tick, and a lot of it's common sense. If you see urgent people hitting a bid and just shoveling out big blacks, maybe they know something. I maintain that most news leaks out on the earnings, and we've developed what's called, I call it a Geiger counter, to detect urgent buying and selling. And it's just not these technical indicators applied on a vanilla basis. They're highly, highly morphed, such that if money flow for a stock is 65, and say it drops to 40 intraday, and then comes back, closes at 65. Well, if you're looking at it from open to close, you may say, oh, nothing happened. Money flow is about the same. But these intraday drops or pops on the money flow are very important. And people are accumulating a position or selling a position in advanced earnings. I just don't want to keep on buying or selling. You buy real hard, you back off. You buy real hard, back off. If you're bullish, and we're able to detect all of that. And so our average batting average is in like around 65% being correct. And when you use options, a lot of times you can lose it all. But if you miss by a penny these days, like these two stocks, actually they beat. Both of these guys beat on the earnings. They missed on the sales.
I hate to see how they look if they missed their earnings.
Oh, well, then you're down 20, 30%. I mean, it's crazy.
You mentioned, though, looking, and doing detecting, for what's going on. Obviously, the money flows and those sorts of indicators are trying to determine what the kind of quote-unquote smart money is doing out there, what the big institutional flows are doing. Obviously, another way to do that is with some unusual options activity. We talk about that a lot on our network. Is that something you guys maybe currently incorporate into your models, or perhaps are thinking about adding, like you mentioned before, some of those names? There were some puts.
We're really thinking about adding them right now. I put out a newsletter, and I'll maybe say what the options activity is. We don't have it baked into the program yet, but we're looking to do it. I mean, here's a real good one. This was a couple years ago in January, in CUDA, Barracuda Networks was coming out with earnings. The stocks trading around 17, and the 15 puts for January had an open interest of 0. But by noon, 15,000 traded at 30 cents. And what is this? I thought it was a mistake, but it wasn't. And the next morning, whoever was buying these things was banging them out at $5. So it really pays to pay attention to, craziness. I mean, the tails, they're just a nutty action. And then there's been cases where I'll see call options be very heavily traded, buying at the ask, and way beyond their theoretical value. I mean, when call options get ridiculous, they usually get more ridiculous the next day and the next day after that. When you see like a call traded at $2, which has a theoretical value of $1, there's something going on there.
That's why we saw something like that yesterday on a network. We were looking at GameStop, not a name we talk about a lot, and certainly not a name that gets talked about in very bullish terms these days. And yet we saw someone paling in, I think, picking up about 16 to 18,000 very near-term calls right around at the money that expire this Friday. So not a thing. That's a name that only trades about 10, 11,000 contracts a day, maybe on a good day. Yeah. So that kind of stuff certainly is eyebrow-raising. We like to look a lot of that on the network. Obviously, you can't just read it at face value. You have to dig into the tea leaves, see what's going on with the hedging, see what's going on. You know all this, obviously, with the implied volatility and things, which makes it difficult, I'd imagine, to incorporate into a technical model because you have to have all these other anecdotal factors. You can't just say someone bought 10,000 calls. It has to be, what's going on with the implied. Were they opening or closing? Where did it go up on the bid-ask spread? There's a lot of things that you have to kind of, I'd imagine, do a little bit more nuanced things that are maybe hard to automate. Is that one of the reasons why it's hard to incorporate? Or maybe is it getting the data? Is that another challenge?
All of the above. But we'll do it. We are very tenacious, and it is important to add that. By the way, GameStop was a real fooler on their earnings. I mean, if you were, we score the stock over 6 days, so we take into consideration 6 days worth of trading. But if you looked immediately before the earnings were released, you would swear the stock would have gone up on earnings, but we had a negative read on it, and sure enough, it headed south on their earnings.
Yeah, look at the chart right here. It closed at about 14 and change, and it opened up the next day about 12 and a half or so. So in a $1.60 or so sell off. So yeah, for a name that's only $12, $13, $14 anyway, that's a pretty sizable move. Well, Tony, we kind of touched on a lot of that kind of stuff you mentioned. Oh, by the way, before we even get into some other platform stuff, I know you do a lot of single names. Listeners, I'm sure, would like to know as well. Did any of the analysis can be applied to, let's say, broad macro stuff as well? Let's say an index.
Absolutely. We're getting tremendous bearish readings on the IBB, and I think that after Trump biffs Amazon, he's already said he's going after the drug companies, and I see it what our score is. It's just especially today, the IBB came down to a little bit below 101. It rallied back up. It's kind of moving sideways now. If that thing trades below 99, I tell you, it's already come down a lot. I mean, yesterday opened at 107. Today trades almost a little bit below 101. I mean, that's a pretty big move already. But I'll tell you, if we crack 99, there's a lot of support around par on that thing, and we crack that, it's going into the 80s. And although I'm not a fundamentalist, you always wonder and muse, what's going on, and watching Amazon get clipped after he gets done with Bezos, I think all the drug companies are going to get biffed.
Do you ever take it and apply it to, let's say, a Russell or a NASDAQ or an S&P?
Oh, absolutely. And
so are you guys buying this big sell-off we just had? Of course, we're rallying a little bit today as we're recording this, but we're coming off the heels yesterday of a massive sell-off in the broad markets. Are your technicals buying what the market is selling or not?
In some cases, yes. In some cases, no on the stocks. I'll give what is another stock, another group or another stock that is not doing well and has had tremendous negative scores in our system. It has nothing to do with earnings. Maybe there's another event coming up, but is WYNN, WYNN. I mean, that stock opened at 183.5 and went straight down. And the market's up today, and it hit 177 something. For a stock that's supposedly going to get taken over, that's not the action you want to see. And the same thing happened yesterday. It opened up like 186.5, that top tick, and boom, straight down. So I think that there's something seriously wrong with it, and maybe it has to do with the top guy.
Well, yeah, they had those big issues with their founder, Steve WYNN. I believe he's no longer a part of it, correct? So,
well, I think that people are realizing WYNN isn't what it used to be without Steve WYNN. Finally,
he is in the name, right?
I mean, right. I mean, it's like if Colonel Sanders was divorced from Kentucky Fried Chicken. I mean. These founders have a certain cachet and a certain what would Tesla do if Musk left? And when it was on that order of magnitude, and
you get any hot? I'm sure a lot of your users like Tesla. A lot of our listeners like Tesla. Your technicals saying anything interesting? That's been one that's off 100 handles over the course of a couple of weeks,
and deservingly so. It's been a hard stock to trade, and it's big short interest. And whenever you have a short interest, you get a nice sharp rally, which you're getting today. But if it retraces, I'd say half of its move back up, I think it would be a good short again.
Yeah, you're right. It's having a little bit of a, let's see how far. Yeah, it's up about, only 17 handles today, Tony, or about 7%. This thing moves like, I can't tell you how many of our listeners have written into us and told us about how, they love to just sell puts in Tesla, it was free money. And, it's one of those trades that works until it doesn't. I know a lot of them were short the 300 strike. I think that one's probably coming back to haunt a few people these days. It got to down, 244 yesterday, I believe, something like that. So you have puts that were you probably sold for $3 or $6 or $9 and now worth 60, 70, given how much vol is out there. So yeah, that's one.
Let me tell you a story about free money. This was in the early 80s.
Do you have some on you right now? That's a great story. I love to hear free money stories.
Okay, well, there was a rash of mergers back then. General Mills and R.J. Reynolds, and I was at a clearing firm that had an open area, a desk where traders would talk, and they made a lot of money selling the puts, like RJR when it got taken over. And he said it was free money. And then United Airlines was going to go private in the LBO. And stock was trading around 280, and these guys that were the free money guys, they didn't even go down to the floor. They would just sit upstairs and make free money. So they thought. So the 230 puts were like a couple of bucks. And I remember this one guy used to, sell these puts. It's free money. It's free money. And the stock goes up a little higher, but the puts go up. Puts go to $3. Eventually, the 230 puts went to $5, and these guys all were selling them at $1. And then the news came out that the deal got busted, and these puts went from $1 that they sold to 100 and something. And they were short them. Being a market maker, you can do stuff like that and not have to put up the margin you do as a retail broker. And it was quite devastating for these guys. So, and there's no such thing as a free put. Absolutely not.
Well, Tony, that's certainly, I'm sure the people right now who are sweating over their Tesla puts can maybe take some solace in. They probably haven't gone to 100. It depends where they're short, obviously, but they're probably not looking at $100 put. Hopefully, at least with today's.
I think these puts actually went to eventually 150.
Oh, geez. Hopefully they close them out before that part. That'll leave a mark. If you're selling them for $1, you're buying them back for 150. A little bit of reverse of the buying for an eighth, selling for $50 story you were telling us earlier, Tony. I think I'm legally obligated these days to ask you about the hottest area in the space. Everyone and their mother is coming in here talking about crypto, Bitcoin, Ethereum, Ripple, pick your poison. Obviously, that's a hot area. A lot of people are interested in it. You're working on a technical analysis platform. You're primarily focused on equities. I'm curious. I haven't had anyone really approach me to even talk about technicals on crypto. So is that something you're looking into? Or do these same types of models, do they even apply? I mean, after all, crypto is a completely different asset class. So do you have to create new models? Or what's going on with crypto and Prognos Analytics?
Well, the crypto currencies have no fundamentals to go on. It is strictly technical. And out of all our asset classes, equities, commodities, bonds, it works the best on crypto. It's very, very telling, and
that's stunning to me to hear you say that. And you haven't changed the model; it's the same model, just applied.
Same model. Again, money flow is very predictive. When you see the big lots coming out of the woodwork, and we watch every trade. We score it real time during the day, and what we've noticed is that when the score deproves dramatically on a daily basis, the odds are real high that the next day the current Bitcoin and the other guys will go down. Say if I have a score of minus 50, which we tend to get crazier scores with the crypto, And say you even go from minus 50 to minus 30 or minus 20 in our system, a big improvement would be a buy signal. And it's more predictive with the cryptocurrencies. And again, it makes sense to me because our program's a technical program, and there's no fundamentals. You know, with stocks is tricky. That's why, you know, we don't have a higher batting average. You know, they release earnings, but then they'll throw in a buyback. And, you know, it's a lot of times insiders could be wrong. You know, like with this stock switch, I saw more call buying than put buying, and it took me back a little bit. But sure enough, our program was right. I mean, they beat by 3 cents, and sometimes, but you don't have any of that with Bitcoin. There's no earnings, there's no corporate buybacks. It doesn't matter. The CFO didn't resign. There wasn't insider buying. There wasn't insider selling. There wasn't 13D file. I mean, with stocks, it's a lot trickier and it's a lot harder. But Bitcoin's pure. It's actually purer than a commodity, actually. Less going on because, like with grain, you have the weather. With energy, you've got OPEC. You got other things that could cross you up. But there's nothing that, you know, it's just pure technical. Fibonacci really works well too. You know, when we ran to 20,000, it had a real big sell-off. It stopped at exactly 6.618 on the way down at around 11,900 and then bounced. And so the Fibonacci levels are important to look at with Bitcoin. And again, money flow, that's the number one thing.
That's fascinating to me because you hear so many people in the industry complaining about how, you know, just the crypto isn't there yet. You know, the exchanges are fragmented. There's a bunch of different venues trading the same asset at different prices frequently. The liquidity isn't there, so it's hard to run some sort of models and things on it. And even if you wanted to, it's hard to take advantage of them because it is so fragmented. So you hear a lot of people lamenting that, so you would assume that would all make it more difficult to do the kind of analysis you're talking about. But it sounds like you're saying just that it has those problems, but the fact that the universe is so Spartan, it's so sparse, it hasn't really been built up, like you mentioned, with the 13D filings and everything else with stocks, that it makes it a much more, I guess, straightforward, or as you said, I believe, pure asset class. I don't think anyone's ever called Bitcoin pure to me before, so you might be the first one.
It's the purest asset class there is.
Yeah, that's certainly that might be a good quote for the article we do on this, Tony. Because that's certainly the first time I think I've ever heard it called that. So right now, obviously, a lot of people are hemming and hawing about Bitcoin. It's been moving all over the place. Hit 20,000 last year. Of course, got down below 10. It's somewhere, I think last time I checked, it was around 7,000. Of course, it moves a couple hundred handles at a clip, so it could be many thousands away from it right now. Are your models giving you any screaming buys or sells right now?
The score really improved over the weekend when it touched 6,500. I think that's a pretty good bottom, at least temporarily for a week or so. I think we could rally. 10,000 will be a tough nut to crack going back up again, and 11. If it is ever gets back to 11,900, I'd say let them have it at that level. That's really a brick wall.
And so, obviously, you have crypto there now. You have the technical analysis. You're working on incorporating all the option stuff. You have a lot going on there. By the way, has the launch of the listed futures, either the CME or the SIBO, has that improved things at all, or has that maybe muddied the waters because now more people are playing, so maybe the product isn't as pure?
I think it's helpful because you can look at the money flows in the future market as well. Here, I'll tell you a story. When Brexit came about, we had the currency futures. Of course, over 90% of currencies are traded in the cash market, but right before the vote, like 3 days in a row, the British pound went from 147 or so to 150.50. So it was going up right before the vote. It closed at 150.50. But we had our program looking at the futures market. Again, it's like maybe 2% of all currency trading. But as the currency was going up, the money flow readings that we got were incredibly bearish. And it's the same thing. The money flow intraday, hundreds a lot. They're pounding it out. They pounding it out. They back off, let it rise, let it go up. But, oh, man, I never saw anything like this before. And then when the vote came out, it was the biggest move in currency history for the pound. It went open up 131, traded below 130. And but our system had it by looking at the futures market. And it's a good way to see what is likely to happen in the cash market.
Well, Tony, we've been chatting a lot about your platform and all the different stuff you guys offer. Breaking in crypto now over there, which is certainly fascinating. Looking to incorporate a lot of options indicators, perhaps going forward, using them to modify or perhaps amplify what you're doing already with the money flows over there. So if people are listening to this and they're intrigued, they want to learn more about all things Prognos, where should they go? What should they do?
Well, I think that it's a very, very sophisticated system, and it takes at least a month to get the feel of it. We score instruments at the end of the day, intraday. We have a watch list. You can see the technical indicators change via colors. We use red as bearish, green is bullish, and yellow is neutral. And for exceeding a bearishness, we use a maroon color. And for exceeding bullishness, we use a dark green. And it's a very highly sophisticated product. What I would recommend, I send I bird dog people. I watch the program and I send out an email, and I'll probably send one out tonight on these three or one of the three, depending how they trade into the close. I like to give as much advance warning as possible, at least an hour, so people can get in. Don't like to do things at the last minute. But if people send me an email, I'll put them on the newsletter, and I use the newsletter also as an instructional thing. I'll send an attachment with a bar chart of the security, plus the rating and score and the colors of each technical indicator, so you can get used to these calls yourself. And then if people like that and want to upgrade to the software, we'll give a free trial of that as well. But it's very sophisticated, and it could be overwhelming to begin with. But I've been pretty good on calling the stocks and the stock market right now. I also run a model portfolio, and which is quite massively short, and we have some longs, but I have sell stops, and I've been getting stopped out a lot of stuff. But it's not only for earnings. Like Baidu already came out with the earnings, but if you look at the technical indicators, every one of them was maroon. We got short at 256. It's 219 right now. So when I use this for generally building a portfolio, we score every stock. We got 8,000 stocks, and you can see the score. And what I like to do is, however, just restrict it to the S&P 500 and pick liquid stocks. And Well, what I'll do is I'll take the top ranked stock and go along that, and take the worst stock and short that. And so I keep adding stocks throughout the week, and at the end of the week, on a Saturday or Sunday, I'll recap. I'll say how much money that the model portfolio made, how predictive the earnings were during the week, and I recommend people start with that. And if people send me an email, I'll add them to the newsletter, and then we'll go from there. That's the way I think we should do it.
If people want to get access to that newsletter, start getting some of your recommendations via email, where should they send their email to? What's your address?
T. Kolton, T is in Tom, Kolton, Kolton, at Prognos, Prognos, analytics.com.
There you go, T. Kolton at prognosanalytics.com. Well, Tony, we covered a lot of ground. Actually, we've been talking for almost an hour here about all different topics, equities, news activity and options, crypto, which seems to take over everything these days. But that said, we covered a lot of ground. So perhaps there's something we neglected to cover you'd like to touch on now, or perhaps you'd like to leave our audience with a little bit of a hint, a little bit of tease of what's coming down the pike from you guys at Prognos. If so, sir, now is the time. The floor is yours.
Well, we're constantly adding features and fine-tuning our system, but the way it is, I don't want to change too much because it works. And you could probably add more things, and my programmers have said, add this, add that. I'm afraid to change anything. It's been working, and we've got customers that are very happy, and the product's been out there now for almost 3 years, and it's working.
Hey, you can't say more than that, right? If it ain't broke, don't fix it. Well, Tony, I'm glad we can get you on the network finally to talk about all the different stuff you have going on over there, and we'll look forward to seeing how all these calls and indeed the adaptation or the adoption of crypto over there on the platform unfolds in the marketplace in the coming months.
Great. Thank you so much.
Thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.